Well, welcome back to another episode of the Financially Free Journey podcast. And I'm your host, Courtney Dyer. And as you guys know, this podcast aims to dispel the seemingly complex topic of personal finances, money management, debt, savings, investing, and even retirement. Now, today I have brought on Dan Ryan, and he is a certified financial planner who specializes in helping millennials. And you know, a lot of you guys are millennials, and he is here to talk about investing. He's been featured places like Forbes, Business Insider. So Dan, he's an expert. He knows what he's talking about. And we're going to be talking about inflation and ESG investing, just tons of hot topics. So Dan, welcome to the show. How are you doing?
I'm great. Thanks for having me today, Courtney.
No, I'm excited to get into this with you. And first, just tell the listeners a little bit more about your background so they, can get to know you. And then we're going to transition into some investing.
Sure. So I am a financial planner, financial advisor in the New York City area. I work with individuals and families, helping them kind of take a holistic approach to their financial affairs. I worked for a lot of my career in kind of that ultra high net worth space that this is the hallmark of kind of wealth management. But at some point I decided to transition to working with a younger client base.
So let's I don't know if you're allowed to pick favorites here, Dan, but do you enjoy working more with the ultra high net worth or the younger millennial crowd? I think this is a trick question.
Sure. Yeah. I mean, I left a big firm, and overnight my average client age went from 76 to 36.
Wow. That's a big difference, and a totally different stage in life,
Yeah. Yes, completely. And a totally different set of issues. And we'll talk about inflation, but it affects those groups entirely different.
Well, let's talk about inflation, Dan. Like, inflation, I feel like is such a hot button topic right now where tons of people are worried. I mean, you see the prices of gas, the prices of goods, you see just an array of issues, right? And it's a complicated mess, or dumpster fire, as we like to call it. But what are your thoughts on inflation? And I think just really the importance of understanding it and its impact on finances.
Sure. I mean, it's a very hot button topic because for the past couple of years, nobody's had anything to worry about, right? So why not make it inflation?
Yeah.
But really in the markets, there has been little to worry about outside of, March 2020. And so having inflation as kind of a boogeyman out there makes a lot of sense when we see things start to tick up. And a lot of that's been exacerbated by the global pandemic we're still experiencing. It doesn't make a whole lot of sense why all of a sudden there's these massive supply shocks, be it chips from Taiwan or, other goods. And so, it's just the fact that, different areas and different territories are handling all of the situation very differently. And the recovery from it is not even across the board. And so you will get these kind of growing pains. And we've all heard the phrase transitory used so much when it comes to inflation, which is probably a word none of us were using 6 months prior. But it really does look like it's got all the makings of being transitory inflation. And that's what, the Federal Reserve continues to tell us. But that doesn't feel good when you're experiencing it and when you're going to the pump every day and it's costing a lot more to fill up.
Oh, yeah, I know. You're like, but it could be transitory inflation. But right now I can only buy X amount of groceries that I used to be able to buy for the same dollar amount. I mean, you see it everywhere. And it's interesting because, as you said, with the pandemic, it's like, there's no rhyme or reason with the supply chain issues because every country is handling it so different. That's why we can't necessarily connect the dots and make it make sense. So it's definitely a conundrum we're in with inflation and trying to figure it out and how it might impact our personal finances. Do you have any tips for the listeners as far as, how they can proceed forward with inflation in mind?
Sure. And this comes to what kind of phase of your life are you in? Because there will be a time in your life where inflation will be your biggest risk factor. It will probably be right when you're entering or early in retirement, when your life is kind of a fixed basket of goods and you have a fixed amount of resources that you will need to cover that. And inflation can destroy that whole plan. So in a world where I was doing a lot of retirement planning, inflation was one of our biggest focuses, and how you can invest to counter inflation, whether it's buying treasury inflation protected securities tips or other assets, commodities, real estate that do well in inflationary environments. That definitely becomes a part of your life at some point. But also for my clients that are, much younger, it's more of a focus of, well, what do you have in your bag of tools to combat inflation? And the reality is, for many millennials, your biggest asset is your human capital, is the fact that your wages will be going up over time. And a lot of my clients worry when they think of inflation. They think, oh, is this, they use the phrase lifestyle creep. I don't like to say creep. We're not doing Radiohead karaoke here or anything.
Yep.
It's actually that your life is changing, and it will 3 or 4 more times over between now and retirement. Your family's growing, you're having new needs, new standards, you like to enjoy a better lifestyle, and that will be part of your life, and you will be growing, and your income will be increasing, presumably, and you will be increasing your savings rate, maybe, after the kids are out of the house. And so factoring that life is not just this linear rush that, we take your expenses today and throw them at 2% compounded, and that's what inflation will be in your world.
Right. And typically, taking into account your ability, as you said, with human capital, your ability to increase your income over time. And we're not just talking about annual raises, because those don't even keep up with inflation. It's like those are kind of a pat on the back, take that extra 2 or 3% and invest it, because that's not going to make a huge difference. But we're talking about your ability to continue to climb, or you're moving into new positions and you have a different trajectory of your business and your career. You're going to make more than inflation, right? You hope that you're outpacing inflation with your ability to earn.
Sure. Yes, exactly. Yeah. And maybe you make that decision to start an Etsy store on the side or something.
Yeah, absolutely. The hustle is real, and I totally appreciate it. I wanted to touch on foundational principles that people typically forget when they're managing their money. And this is something that you talk a lot about. And I would love for you to touch on that for the listeners, what you mean when you say that.
So, it's taking a stock of what your full world is, and what's important to you and what your goals are. We always say that there's things you can affect and there's things you can't affect in your world. You can control how much you're making, and you can control how much you're saving, and you can't control how long you live. Or you definitely can't control tax policy in the world, and you certainly can't control what the markets give you. So you can control how you allocate your assets and what types of things you invest in and what your asset allocation is. And so a lot of our focus is on just putting our efforts into the things that we can control and accepting the things we can't control, accepting that uncertainty is a healthy component of financial planning. And when you have uncertainty, we're just going to group up and create a new solution set to meet what our challenges are.
Yeah, no, I think that's a really good point. It's like we sometimes lose sight of those things. And, it's just important to be able to recalculate and come up with a good plan. And, that takes me into my next segment, because I know that you have a lot of passion for this, and I want to spend a lot of time on this for the episode, which is ESG investing. And if you can explain to the listeners what ESG investing is, and, how do they know if that's right for them?
Sure. So ESG investing is environmental, social governance. And at the core of it, this is just saying you're going to invest your money in a way that's consistent with your personal values, and in companies that reflect your personal values, in companies that are making initiatives to better the world in ways that you would like to see it. And there's a lot of flavors to doing this. Sometimes it's, sometimes it's called ESG, sometimes it's called impact investing, and just taking the step back and saying, this is what's important to me, and how can I do this with my money? And I do think it's now, today, after the tremendous strides that have been made in this industry, I do think it's something for everyone, whatever their goals and values are.
Oh, yeah, absolutely. And an example of ESG investing is, I mean, let's say you don't agree with smoking, right? And it's not something that you personally, it doesn't align with your personal values. And so you are not going to invest in a tobacco, company or, that industry or that sector, even though there's high returns, because you are aligning your money and you're investing to support things that really align with your personal beliefs. And is that right, Dan?
Absolutely. There's a negative externality to these companies and on society. And, that's the most classic example, guns and tobacco. I don't want them. There's two companies of each. Let's just get them out of the portfolio.
Right. Right.
And but it's evolved from that. It's gone more than, the classic was just screening. And that was the big knock on ESG investing was, well, you're by definition not going to own some of these companies. And some of those companies have done really well over long time periods. But that's not the world we're in anymore. Companies are having a lot more accountability for the effects they have on society. And there are ways to invest in companies that have shown to perform pretty well while doing the right thing.
Yeah. And I think that's an important point to reiterate, Dan, is that just by aligning your investing with your morals and your ethics doesn't mean that you are sacrificing returns. It means that you're shifting into a different sector or industry that aligns with you, but they're still extremely profitable. I mean, you're still going to meet your financial planning needs and your retirement goal for your money, but you're also having it aligned. So at the end of the day, when you lay your head down on the pillow, you can feel good about the companies you've invested your money in.
Sure. Yeah. And I'll say that for a lot of clients, that's a completely new experience.
Oh yeah.
I own this company. Not just I own more of this company, but I know why I own more of it, or I know why I don't own this company, and being really thoughtful about it.
Well, and I'm sure in your career, you've worked with plenty of clients back in the ultra high net worth space where a lot of them may have not even known what companies were even in their portfolio. It's like, just show me the net return after fees. That's all I want to know. How much did I make? Right. And not really digging into the weeds of how did this come to be?
Yeah. And I think that's such a big component of it, especially with the CSG story, but with investing in general. And it's how we work with clients, is making the education component of it big and explaining what's in there. And I think younger clients, millennials and younger even, have an expectation of that. They expect that they should be able to understand what's in there. And, it's my job to just save them the time. They shouldn't have to, be spending a ton of time doing research and data gathering, but we can communicate at that level of understanding what's in there and why it's in there.
Well, and guys, that could be a good thought for you to take away from this conversation with Dan as well, is when you go and if you have a financial advisor or maybe a CFP that you work with, and do they take the time to educate you on what's within your portfolio, how the mechanisms are working, what the companies in the sectors are? And if you are looking to pursue having your money managed, that is a great tool in your tool belt, is asking them, how do you make an effort to educate your clients? Because I want to be educated when it comes to my money. And so I really like that, Dan, because I do think it's our responsibility to educate clients because they interact with the industry as they've been taught. It's like, okay, well, you just tell me and I'll accept it for what it is. But it's important to put that education first and foremost.
Yeah. If you'll allow me to be trite, I always say, to manage your own money, you need to have three things, right? You have to have the mental capacity to do it, which all my clients do. They're incredibly smart people.
Right.
You have to have the desire to do it, which many of them do. They want to be engaged on their finances. But thirdly, you have to have the time to do it, which none of my clients have. So that's my job, is just to fill in on that third component.
And that's where, again, enlisting an expert, especially when it comes to your money. I mean, it's so I talk about this again, like all the time. I'm like a broken record, but it is worth it. It's not something you want to, DIY. So, this is your life. This is your money. This is your ability to support your time freedom and your happiness and your goals. And so it's important to enlist the right person. So, okay, how can someone go about getting into ESG investing? Like, what would that look like for them?
Sure. So, it starts at taking stock of kind of what are the topics there, and you can Google it. MSCI has a list of ESG factors. These are all the things we look at. We look at climate change, equality, worker treatment, customer concerns, environmental impacts, stuff like that, and say, hey, these are what's important to me. And a shortcut is that you can't have everything, right?
Right.
So, taking stock and saying, these are the most important things to me. These are maybe important but lesser important. And then you can start to do research and say, like, there's a fund for everything out there. If gender diversity is a huge topic for you, there's an ETF for that. If racial equality is a huge subject for you, the NAACP has an ETF that has the companies that align best for them, and frankly, that's a great fund because the fees get donated back to NAACP if that's a cause for you. So it's very easy to find solutions and say, these are the causes I care about, even at the most basic level. And then beyond that, you can start to find, that there's investments out there that are actually making a change and, doing the real impact investing and holding, these companies and these boards accountable for the decisions they're making and the impacts they're having. And, obviously it's a rabbit hole you can go down there, but starting with your values, we start with a questionnaire with clients and saying, what are your values, and making sure that, you pick a couple and just reflect them. You don't have to do everything at once, and your whole portfolio doesn't have to be ESG. It can start with a new investment, that first one.
So, when you were talking, it struck a thought for me. You had mentioned some examples of some, ETFs, depending on, what you're passionate about. Is there any difference when it comes to like risk factors or diversity within the portfolio, for systematic or unsystematic risk within the funds? Because, for example, if you're, it's environmental and you're investing into an ETF that's based off of environmental, impact, is that ETF going to be diversified to where it's not, having that unsystematic risk within the ETF?
Yeah, a fantastic question, and not to give away too much of the secret sauce of the work we do, but that is where we really put a lot of our focus is on the risk component, because as you can imagine, it is very easy to be overweight certain sectors, certain companies when you begin to do this work, and it's easier to have a large cap tech company that looks really good from an ESG standpoint. They've got a diverse board and they have very low environmental impact, and they are Microsoft or they are Google.
Right.
And you just end up with 10 times the amount of the 5 biggest tech companies in your portfolio, and you say, there I did it, ESG, and you've just you've really amplified your risk to that sector and those companies. They're still great companies, but that's not what people had in mind when they got into it, probably. They say, I want to own small companies that are really making a difference or making a difference at the margin. I'm okay owning a company that is the least bad in the commodity sector, or
yeah.
And so that is a big piece of the when you're going to try and make everything work together in your whole portfolio, have this ESG component, you definitely want to be very cognizant of those specific risks that can mount up there.
Well, and that's why, again, reiterating, this isn't a DIY approach to investing, because you may say, well, I understand my own morals, my own personal beliefs, and I know what sector I will or won't invest in. But you have to take into account the difference between systematic risk of the market versus unsystematic risk of the individual companies that you're holding. And if you're not calculating that into the overall diversity of the fund or the portfolio, you are exposing yourself to more risk than what's necessary. And it's like that risk reward ratio. Like, are we, exposing ourselves to too much risk versus the reward we're, projected to get here? So it's an interesting part of ESG, but you guys are doing the hard work to mitigate that yourselves.
Sure. Yeah. And we're somebody else who's accountable for it too, right? If we get it wrong, we'll be the ones held accountable for getting it right. And reporting out on it and saying, these funds are, still doing what we put them in there to do, and it's still aligning with your values. I'll give you the classic example is, a lot of our clients care about the alternative energy sector, and they say, we want, to be really heavily exposed to alternative energy. Well, alternative energy companies are not the best at gender diversity on their boards and in their management. And so those are obviously, high values for both our clients, and saying, we have to put to have our alternative energy exposure, we have to give up something here. And we're cognizant of what we're giving up. But we're going to do more elsewhere.
To balance out the playing field, right?
Yeah.
So, okay, we know that ESG investing, I think, is top of mind for a lot of millennials specifically, and also, Gen Z. It's like, with the digital age we're in, people are more aware and more apt to gain the knowledge they need to have these opinions and these thoughts. And so this is definitely a type of investing that should have been here all along, but it seems like a new concept, right? It's like, why has this not been talked about sooner? So for the listeners, what are some actionable steps they could take today, after listening to this, to say, you know what, I'm going to take action and I'm going to start aligning my investing with what I believe in?
Yeah. So step one, I would say, go out, get the MSCI, it's Morgan Stanley's index of ESG components. I'm drawing blank how many exact factors it is, but there's a handful of them, and saying, okay, like, this is the stuff I want to make a difference on, and picking 2 or 3 of those, and then going out and searching and finding an investment solution that actively addresses that. You can buy an index fund that says, we're only going to own the companies that are the best based on the MSCI, factors. And in my experience, people don't get a lot of feel good and a lot of accomplishment off of just buying a slanted index.
Right.
And so rather, taking the time to identify something that really aligns with your goals, you really care about, and making some initial investment in that, or 2 or 3, and then saying, okay, give yourself some credit. I did some really hard work here and some really hard investing work, and in a quarter or 6 months, I'm going to repeat this process, and make the change gradual over time, instead of trying to making it an all at once undertaking and just flip a switch and say, okay, I have an ESG portfolio, and I hope it all worked at once and works in unison. This is true for all investing. I say, it's true whether it's ESG or it's a thematic idea you want to play. If you've got an outlook on cloud computing or something and you want to express that in your portfolio, take these measured bets one at a time and then regroup on them. So.
Oh, yeah. Slow and steady wins the race. Go
Mhm.
out, get the index, identify what are your factors that you align with, and then go find an investment vehicle or a financial advisor that also has passion around ESG, because not all financial advisors or CFPs are created equal, and they specialize in different, types of investing and with different types of clients. So if this is important to you, if this speaks to your soul, you need to make sure that if you have a current, FA, talk to them about this. Is this something that they have the capability to, as Dan mentioned, slowly, layer into your current portfolio? And then going forward, if you're investing new monies into the market, how can you, shift money invested into ESG funds? So I think it's so fascinating. And again, it's interesting because it's like, why is this a new concept? But it really is in the investing industry. So, okay, if the listeners had just one thing that they could take away from this episode, like they have amnesia, and I love to ask this to all of my guests, like they have instant amnesia and they're like, I have no idea, like Dan was cool, he's in New York. That's all I remember. What do you want them to remember and take away from this episode?
Well, I'm not ashamed about being a New Yorker, so I wouldn't be upset. That's all they remember about me.
It's a good one. Yeah.
But really, it's that you can really connect with your financial world and, frankly, your investment portfolio. That it can be a reflection of you, and it can be something you feel good about at night. That it can be something that you're proud of and confident, and not something that you just set and leave. And it's an index fund because that does the least amount of harm.
You can absolutely not sacrifice profits. You can align your investing with with what you believe in and feel good about it. You don't have to sacrifice one or the other, which I think is this old way of thinking, So I'm so glad that you shared this message, and I know you're super passionate about it. So I'm excited we could do that. Where can the listeners find you if they have other questions or, they wanted to get in touch with you?
Yeah, my firm website and all our info is Sincerus, Sincerus, adv.com. And, my name's Dan Ryan with two N's. You can sure find me in the notes, and I'm on LinkedIn if you would like to connect with me there as well.
Well, I'll make sure to link it all in the show notes. I like to do that so that way the listeners can just, scroll down and click on it and easily find you. And so I'll link your LinkedIn and then also the firm's website so that way they can, do some more research, because that's what I'm an advocate of. If you heard this for the first time today, do research and feel confident in the decision that you're making. And Dan, thank you so much for your time. I really appreciate it.
Thank you so much, Courtney. I really appreciate it too. Take care.
Guys, you know where to find me. It's at Financially Free Journey on Instagram, on TikTok, financiallyfreejourney.com. And I post daily tips and motivation to help you on your journey to financial freedom. Until next time.